Hello students, today I am going to solve one more problem on the topic assessment of companies, computation of total income. This is the 7th video on the topic. I am Dr. Panduranga Nayak, Principal SPS College, Bangalore. So this is the profit and loss account of Sampurna Textile Company Limited. With the help of this profit and loss account, you need to calculate total income for the assessment year 2021. Okay, let us look into the adjustments, and simultaneously we will also discuss the items which appear in the profit and loss account. It's given general charges include rupees 10,000 for advertisement. Before that, just listen. So you need to calculate total income. What is total income? So in order to calculate total income, first you have to compute the income under each head, taxable income under each head. Of course, as far as company SSC is concerned, there will not be income from salary, but depending upon the items, there might be other 4 heads of income. So income from house property, business income, then capital gain, and then income from other sources. And one of the important component of gross total income is the computation of business income. So while computing business income, okay, amount spent on advertisement, normal advertisement, that is allowed. So here you find general charges 40,000. Of that, 10,000 is for advertisement. So this is a normal advertisement, and therefore this is very much allowed. But if it involves creation of any capital item, then it is not allowed. Then that will be disallowed. Here it is allowed. This is a normal routine advertisement expenses. Then rupees 2,000 donation to approved charitable institution. In a donation charity, this is not allowed while computing business income. Therefore, this is to be added back while computing the business income. And while computing the business income, net profit is taken as the starting point. So to the net profit, you have to add 2,000 donation. And then later on, under 80G, you can avail the benefit of deduction. And again, these 2,000 donation to charitable institution falls under with limit donation and 50% deduction. So there are different variety of donations like no limit donations, 100% deduction, no limit donation, 50% deduction, with limit donation, 100% deduction, and with limit donation, 50% deduction. So thus there are 4 combinations, and this donation comes under with limit donations and 50% deduction. Of course, all these things you have already learned in the first part, and moreover in the previous problems you have already understood the computation of deduction under 80G. Okay, we'll come to that point later on, computation part. Then rupees 6,000 paid to motor car company for exchange of old car for new. So in exchange of old car, you have purchased new car and paid rupees 6,000. This is a capital expenditure, therefore this is not allowed. That should be added back while computing business income. Then rupees 2,000 for charity. This is also not allowed. Any charity and donations are not allowed. That should be added back. And then miscellaneous repairs. This is very much allowed. So thus, in this point, under general reserve, you need to add back donation as well as 6,000 paid for exchange of old car for new, and then charity. So these are to be added back, whereas rest of the things are very much allowed. Admissible depreciation as per Income Tax Act is 30,000. Here what is debited? Okay, depreciation. Yes, reserve for depreciation is there. There is no item called depreciation. Therefore, reserve for depreciation is added back, and what is allowed is 30,000 is deductible. Company does not deal in investment. Here is an item here, profit on sale of investment. So the item is connected to this, even though it is not dealing in investment. Company does not deal in investment. If it deals in investment, then it will be business income. But here, since it does not deal in that, it will be taken as capital gains. But what sort of capital gain? So there is no specification whether it is a long-term capital gain or short-term capital gain. We'll assume that it is a short-term capital gain while computing the total income. First you have to deduct and then you have to take it under total income under the head capital gains, that too short-term capital gain. So these are the adjustments. Now look at the debit side of profit and loss account. Salary and bonus are very much allowed. Office rent is allowed. Insurance premium is allowed. Allowed in the sense while computing business income. Postage and stationery item is allowed while computing business income. General charges, but for these 2-3 items, the rest of the items are allowed. Reserve for depreciation should be added back. Any reserve for that matter, reserve for depreciation, reserve for bad debts, reserve for income tax, all these are not allowed, so added back. Income tax, wealth tax, these are not allowed, whereas GST is allowed, local taxes allowed, but these are not allowed, like wealth tax and income tax, etc. Wealth tax is abolished now. Yes. Provision for income tax is also not allowed. So these are the items to be added back. Then if you look at the credit side, you have got interest on FD. This is not related to business income. Therefore, this has to be deducted while computing business income. Then that should be taken under the head income from other sources. Profit on sale of investment is taken as short-term capital gain. Therefore, again it is to be taken under the computation of total income, and there again under capital gains you have to take it as short-term capital gain. So this is about the solution to this problem. Just have a glance over the solution. I have already explained. So though total income consists of 4 heads here, business income is computed separately because it involves so many items. So it is separately calculated, and the final answer will be taken directly to the total income statement. Alright, net profit as per profit and loss account is 2 lakh. You can find here 2 lakh. Then disallowed items or inadmissible items which are debited to profit and loss account are added back. The item is like this: inadmissible expenses which are debited to profit and loss account but not allowed. Like donation to charitable institution, you have come across 2000 here. I told you that falls under with limit donations and eligible for 50% reduction of the qualified amount. And these 6000 also should be added, and charity of 2000 also should be added. Amount paid for exchange of car, this is added. Donation to donation paid for charity is also added. Then reserve for depreciation added. Income tax is also added back. Provision for income tax is also added back. So disallowed items or inadmissible expenses which are debited to profit and loss account together comes to 5,60,000. This is added to 2 lakh. Remember, you are writing add here, therefore 2 lakh and 5,60,000 are to be added. Many times what happens is you write add, whereas here you deduct. Therefore you must be very cautious. So it should be added, that comes to 7,60,000. Now you deduct the items of income which are relatable to other heads of income. Like interest on FD, I told you that falls under income from other sources. Similarly, profit on sale of investment, that comes under capital gain. And allowable depreciation, which is nothing but here they have given in the form of second adjustment, and therefore that is to be deducted because 50,000 is added back, 30,000 is allowed under section 32 of Income Tax Act, that's allowed. So what is allowed? You deduct. So total deductions are 80,000. As a result, business income is 6,80,000. So computation of business income is over. This has to be taken to the income statement. So income from house property in this problem, it is absolutely nil. There is no item like that. Business income, we have already computed here 6,80,000. You draw it here. Capital gain, we have assumed that profit on sale of investment is short-term capital gain. Therefore, that is taken here, short-term capital gain. And income from other sources, interest on FD, 20,000. So if you add up, 7,30,000 is the gross total income. From gross total income, there are general deductions under Section 80. And one of the prominent deductions is 80G. Especially in this problem, there is an item, donation to charitable institution. And this falls under with limit donations and eligible for reduction of 50% of the qualified amount. So it is given, I have mentioned, already explained this. Donation to charitable institution falls under with limit donations and eligible for 50% reduction of qualified amount. But what is qualified amount? Qualified amount in the case of with limit donations is 10% of ATI, adjusted total income, or actual with limit donations, whichever is less. Actual with limit donations are 2,000. Now what is 10% of ATI, adjusted total income? First let us see what is adjusted total income. Actually, adjusted total income means gross total income minus three items. One is short-term capital gain taxable at 15%. But for your information, here, yes, profit on sale of investment. That means we assume that it is on securities. Therefore, it is taxable at 15%. Therefore, that is the one item to be deducted, gross total income minus short-term capital gain taxable at 15%. Number 2, long-term capital gain. Number 3, all deductions under Section 80 except 80G. So, but for short-term capital gains taxable at 15%, you don't have rest of the two items. Therefore, you deduct 30,000 from 7,30,000. 7,30,000 is the gross total income. Alright, so you get 7 lakh. Now apply the rule. What is the qualified amount? Qualified amount is 10% of ATI, adjusted total income, or actual with limit donations, whichever is less. So 10% of adjusted total income is 7 lakh. Of that 10%, that comes to 70,000. Or actual with limit donations, you already come across 2,000. So you take 2,000. So compare the two, 70,000 or 2,000, whichever is less. So 2,000 is the qualified amount of this. So this is the qualified amount. One part you have completed. Now, what is the deduction, rate of deduction? 100% or 50%? 50%. 50% of 2,000 is nothing but 1,000. That is the deduction under 80G. So net amount, total income or taxable income after deducting 80G is 7,29,000. So in this problem, you are asked to calculate just total income. You are not asked to calculate the tax liability. So in case tax liability is to be ascertained, then what has to be done is, first you have to calculate the tax on this 30,000 short-term capital gain at 15%, because these are investments. We assume that it is on securities. Therefore, on 30,000 at the rate of 15,000, you have to calculate. Then on the balance means 7,29,000 minus 30,000. On that value, you have to apply, say, 30%, assuming that it's a domestic company. And then actually you have to add surcharge, but here surcharge is not applicable because surcharge is applicable only if the total income exceeds 1 crore. And if the total income exceeds 10 crore, then of course, if it exceeds 1 crore, the rate is 7% in the case of domestic companies and 2% in the case of foreign companies. And if it crosses 10 crore, then in the case of domestic companies it is 12%, and in the case of foreign companies it is 5%. Say surcharge rate is less in the case of foreign companies, while it is 5% and 12%, sorry, 7% and 12% in the case of domestic companies. In the case of foreign companies, it is 2% and 5%. But rate of tax is higher in the case of foreign companies, it is 40%, whereas in domestic companies, but for exceptions, it is 30% standard rate. So that is the thing. So you have to apply 30%, then add surcharge nil. You have to calculate the total once again. On that, you have to calculate that is health and education cess at the rate of 4%. So if we add that value to the previous total, then what we get is the total tax liability. So that's how you have to go ahead with the calculation of tax liability. But here they have not asked it. What is asked here is simply computation of total income. That's all. So thank you very much.